We spoke with Shannon on budgeting and some about credit. Now we're going to bring in one of my partners who I've done deals with, and we talk. A fellow YouTuber as well, Natasha Bazil, great real estate agent. She keeps it real. She's put out a book. We're going to talk to Natasha about first time home buyers. I'm going to ask her some of her predictions from her industry experience on what she thinks the market is, what the market's going to look like. If you guys have any questions pertaining to home ownership, Natasha is very skilled, great agent, and she'll give you the real. Like, she's not going to give you fluff just to try to get your business. She's going to tell you, yeah, we can do it. You might want to wait. So I'm gonna bring Tasha on. Hey, Tosh.
Hey, thank you for that wonderful introduction. You know, I had to get some pictures, right?
So how you been?
Listen, we made it to another year. Happy New Year.
Happy New Year, Happy New Year. So I want to first say thank you for giving me some of your time on New Year Day. Um, I definitely wanted to make sure I had you on because I love your insight. Like, we have conversations, and you be like, "Bruh, these streets ain't right." You know what I mean? Like, we have real conversations. Um, so first of all, tell a little bit about who you are.
Okay. All right. Well, hello. I am Natasha Bazil, realtor, associate broker. This is my 14th year in real estate. I specialize in new construction, relocation, dual moves, someone's selling their starter home, buying their next home. However, I have sold all over Georgia. I'm licensed in Georgia. I have sold all over Georgia and I have worked with all types of transactions. I have also assisted people that aren't in Georgia. So if you do need an agent that's not in Georgia, I can refer you to a like minded agent. I got into real estate because I did it wrong. I purchased at a time where they were just giving away houses, and I came, born in New York, moved to Florida, grew up in Florida, and around 2006, 2007, it was real easy to get a house and they were giving away houses. And I signed documents. I had a $30,000 balloon payment. And, at the time they were just like, okay, when you move, just refinance. Yeah, you can't refinance if the market crashes. I mean, yeah, things have to align. It's just not a blanket statement, just refinance. But I didn't know that. I didn't educate myself. I could have lost my house. Thank God I didn't. But coming through that process got me interested in real estate. And I said, I'm going to help people do it better. So that's how I got here 14 years later. We are still here. And I just want to thank Kevin for having me today.
24 in terms of the real estate industry was a different look for all of us, right? A
Mhm.
different look from me from the lending standpoint, different for you as a realtor, but also the consumer. It was like, am I ever going to buy a house, or should I buy a house? Because
Mhm.
you don't, you've got everywhere from the market's going to crash to a reverse crash to interest rates going up to are they coming down? And what I tell people is, in life situations, doesn't matter what the interest rate is. If you need to move mom in and she needs a downstairs bedroom, you're not going to say, hey, mom, wait until rates get 3%. You're going to figure out, how do we buy this house, right?
Mhm.
If you need to refinance and you're getting a divorce, you're not going to say, hey, let's stay together till rates get better. No, like, you're going to get out of that
Right.
situation. I can speak from a lending standpoint of what I see of the market, but I want your take on it because you have a different role. Like, you're in the trenches with the buyers. We've had a lot of new rules as to what real estate agents can do and what buyers' responsibilities are. And I wanted them to hear it they hear it from me from my standpoint of what I see, but I want them to hear it from an actual agent who sells real estate on a consistent basis and who's been in it a while, has seen a couple different markets. So let's kind of start out with the buyer's brokerage agreement. How is that affecting your buyers and your business as of now?
It's not. And I'm going to
Okay.
tell you why. This is something that has been in play for me. Well, let me go back. Georgia is one of, I want to say 5 or 6 states that was already using a buyer brokerage agreement. So we were already ahead of the game, and other states had to get on board, and they used Georgia as an example because we already had one in place. So that's one. What did change though was like kind of like leniency. So our brokers are advised like, okay, you should get this filled out, at the beginning. But we relax. Agents relax. Some agents were like hard set. They got it filled out at the beginning. I will be honest with myself. A lot of my clients, we have a relationship, even though you can't go on that 100% of the time. But we do have some form of relationship where it could be like before closing, a couple of weeks before closing, and we're just kind of crossing T's, dotting I's, and we're like, okay, let me get this paperwork in. Hey, can you sign this by a brokerage agreement? Granted, we've already went over it. They know what's involved in it, but the actual physical form, they may have not signed. So I'm getting that in. Now you have to get it signed before they even see a property. So where I say it, it hasn't really impacted my business because it's something I always talked about up front, went over it in my home buyers consultation, just making sure we were all on the same page. So it was always a part of business, but now just you have to get it done up front. So for maybe someone else that's in a different state where this is totally new, they never got anything signed, then I could see, it's different for them. And then also depending on, how they're finding their agent or how the agent is finding their client. A lot of my clients find me online. And before they've even contacted me, they've watched several of my videos. So they've gotten to know me in a sense, or, to get a sense of what working with me is like. So there's a level of comfort there. It'd be different if someone just went on Zillow and just got an agent, and now this agent is just putting a document in their face saying, hey, sign. This person doesn't know anything about that agent. So I could see, there would be some hesitation in signing something and they don't know anything about this agent.
So you brought a good point up, Tasha. Real estate is local and regional. So like when you look at the news, you get a nationwide perspective, right? As well as when this NAR settlement came out, you get a nationwide perspective. Those 5 states in place that already had it going, about the buyer's brokerage agreement, it's business as usual.
Mhm.
But to the consumer here, so you add another level of being scared. You've got housing prices increasing, interest rates not going down, and now you want me to pay my realtor? Like, why don't I just do it myself? I get the mindset of, hey, I could potentially save money by not using the realtor, but 10 times out of 10, you're going to cost yourself money for not using the realtor. Because, yeah, you might save, let's say you save $4,000 now, which what it would seemingly be. But what if you overpaid for the house in the beginning? You're not saving anything. Um, Kind of touch on some things you do because I think people the so the NAR case that the case that we're talking about, real estate agents, we're talking about where some sellers said, "Hey, I didn't know that I was paying for the buyer's agent," and I feel like if I'm selling the house, I shouldn't have to pay the buyer's agent. Like I wasn't aware that that was $6,000 that was taken away from me that I could have had. So then they file a class action suit, right? Now, this is my take. You're filing a class action suit and you win, and the deal is millions and hundreds of millions of dollars. But those sellers that were a part of that class action suit get between 20 and $100.
And you know who gets all the money? The
The attorney.
lawyers. The lawyers. So sellers knew that, you said they weren't aware. They say they weren't aware. Sellers were aware that it was, they were paying. They may not have liked it, but they were aware of it. It's baffling to me. Not baffling. Maybe baffling isn't the word, but when those sellers bought their house, they didn't pay a commission. You know why? Because this person that sold it to them took care of it.
Yep.
And there are a lot of sellers to this day that are still of the mindset that they are willing to assist the buyers, whether it's closing costs, commission, they are willing to assist with funds. So just know that even though it's, I feel like it's a lot of fair media, put out there. Um, there are a lot of sellers that are willing. You may encounter some, you will encounter some that are going to play hardball and like, no, we want to sell for this. Next, that would be my approach, would be next, because there are going to be a lot of other sellers um, that are going to be out there that are going to be willing um, to assist in those costs.
Right. So tell me what you do as a real estate professional in terms of with your buyers. Because I think that's also misconstrued of what you guys do. I think with the TV shows, you show three houses, you meet the listing agent at Starbucks, you guys shake hands, and then all of a sudden the next week the buyer's got keys. Tell me what it exactly is that you do as a real estate professional. And you can be as detailed as you want because I think people need to hear what you have invested into them and understand, even if they appreciate what you do, to give them a clear picture of what they should be looking for in an agent as well.
Okay. You remember In Living Color?
Yep.
I wrote a song about it, like here it go. Wrote a book about it, like to here it go. But I really did write a book about it. This book was for agents because there was a time, maybe it's tapered off, but for several years, it's like, I'll just get my real estate license. It's so easy. Like they were quitting their jobs and getting into this business thinking that it was going to be the easiest thing in the world. And I encountered many agents. I was like, yeah, I got my license. And then I got out of it, like, because this was not what I was expecting. There was a lot more to it than meets the eye. Granted, you're going to have your handful that are not in it for, true purposes. They're not really in it to help people and guide people, but they're going to fall to the wayside. A lot have been falling to the wayside. But what I do, so yeah, it's going to start with a home buyer's consultation. And for a long time, agents were just seen as like door openers and tour guides. We're just going to get out and see houses. That's all agents do. No, your journey needs to start with a home buying consultation. It needs to be a meeting of the minds. Let's discuss your goals. What are you trying to achieve? Everybody's goal is going to look different. You may be trying to move down the street. You may be moving from an apartment to a house. Somebody may be moving from New York to Georgia, may have a house to sell, and then moving down here. Everybody's journey is going to look different. So we need to first identify what your goal is. We also need to see if we're on the same page. Our expectations, what is the agent's expectations, what is the buyer's expectations. We want to have that meeting. We also want to discuss the process. What does the process look like? Because you may have one idea in your head, and then when we talk, I'm like, okay, well, this is actually the process. And that actually happened to me a couple of weeks ago. This lady, she has a house to sell, but she was like, yeah, she wants to get out and start looking. And when I spoke to her and kind of explained the process, yeah, you have a house to sell, and she wants to eventually end up paying cash. But I'm like, if you're going to look at homes now, you actually need to have proof of funds showing the cash, or you need to have a pre-approval letter. Like, we need to have something. And she's like, that makes sense. I didn't think about that. So that's where the conversation happens to discuss, okay, what are you trying to do? Let's put a game plan in place. So it's going to start there. Then we're going to get to identifying, well, we got to get with the lender, because I say this is a team effort. The lender is the finance person. They're going to give us the go ahead, the pre-approval to say, okay, go out here and start shopping. Then I can get you out here to actually get you the house. Those two things have to be lined up. Like, we have to have that financing in place. And there's components within that I have to understand in order to help you reach your goal. For example, are you approved FHA or are you approved conventional? And if you're approved FHA and now you want to buy a townhome in Georgia, that limits your options as far as townhomes go. And we won't get deep into that. But this is where we have the meeting of the mind and the game plan, and just understanding your goals and what you're trying to do so we can put a game plan in place for you. And I know you watch social media, or you spoken to a cousin that bought 10 years ago, and this is, what happened for them doesn't mean it's going to happen for you. That's why we need to tailor a plan for you. So now we're going to move forward, and we're going to get into the home search process. And I've heard people say, well, I'm the one that found the house. And you might have found the house, but your agent is going to be sending you things. You could be looking online. Like, that is not the end all be all of a real estate transaction. Who found the house? It's what happens after you found the house. If it's a resale transaction, there are so many moving parts and components. You have your the offer, writing the offer. What's important to the seller? Like, what is going to get your offer accepted? Are there any other offers on the table? Just finding out all those different components, and what's going to work for you and work for them. So putting that offer together so that it works. And now, is the seller willing to put money towards closing costs, agent compensation, just tailoring that, getting your offer accepted. Now you have earnest money that you put down. You have your inspection period. Now we're going through the inspection report. The inspection reports are always going to be long. Unless it's new construction, they're going to be shorter. It's still going to be a report. But I have to advise my clients in the home buying consultation, like, don't run when you see your home inspection report. It's going to be 50, 80 pages. A lot of it is going to be FYI. A lot of it is going to be maintenance. We are looking for big ticket items. We are looking for red flags, talking you through that, talking with the home inspector if we need to get clarification, guiding you through that. Then there's also the appraisal piece of it. Is the house going to appraise? And then that's even back to when we put in the offer. We looked at comps to see, okay, is the house priced right? Is it overpriced? Are we going to offer less? If we're going to offer less, how are we going to justify it to the seller or explain it? Because it's one thing to say, yeah, the house is overpriced, but if you're dealing with a seller who has in their mind that they have the best house ever and they want top dollar because of XYZ, there's a lot of emotional navigating as well. So I know that was a lot. Within that, we're also trying to manage timelines because we want you not to lose any money in this transaction. So you put down earnest money. We want to make sure that we are adhering to deadlines so that if for any reason this transaction is not going to go through, that we cancel within the necessary timeline so that you get your earnest money back. So there's a lot of things that are happening behind the scenes, and with social media, TV shows, see 3 houses, you pick one, you go to closing. It gives the impression that, I really don't need an agent. I can just do it myself. There's a lot that does go behind the scenes. I would highly recommend that you pick your team. Like, your team is your lender, your real estate agent. There's other people involved in your team, like your insurance person. Like, I don't want to say her name wrong. Kiana. Like Kiana, you're going to have your inspector. That's going to be a part of your team. But your primary team at the beginning is going to be your lender and your agent. So I know that was a lot. Take it back.
Yeah, I want you to be detailed. I wanted them to get a full picture scope of what goes on.
Yeah, and there's more to it, but I'm just going to stop there because even after that, after the appraisal is done, what happens if the appraisal comes in lower? And I'll just give you one example. I did give it to you, and I'm going to take it back to give you an example. It's very easy for people to say, well, I just won't use an agent. And it's almost like having insurance, like you talked about before. We're paying this money every month, whether it's home insurance, car insurance. In the event that something happens, we'll have that protection there. So you go through a real estate transaction, you say, I'm not going to use an agent. And you're hoping that you're hoping it goes through smooth. And I had to let that go a long time in real estate because I really thought, I'm like, why? Something is always coming up. Like it has to be something on my end, right? I realized, no, it's just real estate. There are so many moving parts, so many different people in a transaction. Something is always going to come up. So I do not promise my clients perfection. What I do promise them, as things come up, I will navigate you through the process. And I also let them know that in the beginning, like when things come up, don't run. Don't say, oh, this must not be met. No. It's just part of the process. Anything worth having it's going to be a process. But I'm going to help navigate you to the closing table. So the example I was going to give you, I was working with some buyers. They were relocating from, was it New Jersey or New York? Up north. And they were moving down here. We got a home in Locust Grove under contract. They were approved through a known company, and online company, and the appraisal came in $95,000 below asking price.
Oh,
And yeah, the appraiser, we just happened to get the appraiser that nobody would ever want to work with. He was mad at the time that the market was rising the way it was. And he said he refused to use the comp next door. He refused to use any of the comps in the area. And the comp next door was exactly like this house. He refused to use it because he just didn't agree. Sir, we don't care if you agree, like just do your job, right? So there's things in place when, an appraisal comes in low, there's a process. And the lender that they went through, this online lender, they were just like, there's really nothing that they could do. So I ended up taking that client to a different lender who got the FHA appraisal thrown out, got another appraisal ordered, and they were able to get to closing. So if you were working that transaction by yourself, not knowing anything about real estate, would you have known what to do? So there's an example of why, that's reason enough why you want an agent to guide you along this journey. And I consider myself a guide. I'm guiding people through the process. All right. Go ahead, Kevin.
no. Um, so we got a couple questions.
Okay.
So I think Clark's an agent as well. So Clark, thanks for helping out in this in the chat, man, because hearing another agent's standpoint definitely helps us out.
Yes.
Kimberly wants to know, how much is Earnest money, and does it change per house, or is it a standard percentage, and when it is supposed to be paid?
All right. Great questions, Kimberly. So how much is earnest money? It depends. It varies. There was a time when I first started, mind you, I got licensed in 2011, where the kind of going was $500. A buyer could put down $500 and get under contract. The market has changed, and then it kind of changed to $1,000. People could put down $1,000 now. And for the past while, we're seeing like the norm being 1% of the purchase price being the norm. So you could say, hey, I only want to put down $500. That doesn't make your offer look strong in this market, because now we're just seeing, oh, sorry. I'm saying sorry to the mic that I knocked over. Disregard that. But yeah, you just have to go with, okay, what is going on in the market right now? So for the past while, we have been seeing earnest money being typically 1% of the purchase price. Some people do more because it can be a way to strengthen your offer without really giving more. So let's just say you have two buyers putting an offer in on a property. One person, $400,000 house, they're putting down $4,000, 1%. Another buyer is like, hey, tell them I'm gonna put down $10,000 earnest money. It's really no more money that the seller is getting, provided nothing goes wrong and the seller doesn't, keep their earnest money, but it's just showing them like, hey, we're more serious. I'm going to put down more. So it's negotiable. You could say it depends on how much you want to put down. Does it change per house or a standard percentage? Okay, answer that. And when is it supposed to be paid? Earnest money is generally paid once all parties are in agreement, meaning it is a binding contract. All parties have signed on the contract. So let's say we write a contract today. You and I working together. You're the buyer. We submit the offer to the seller. Today's Wednesday. So Thursday, the seller signs off on it. There's a step that needs to go on in between that where what's called a binding agreement date that all needs to be signed. All that is filled in tomorrow, which is Thursday. Then the clock starts starting Friday. So let's say you have 3 days to submit your earnest money. So we put in the offer Wednesday. Everybody signed. We're binding on Thursday. The clock starts Friday. So now you have Friday, Saturday, Sunday to get in your earnest money. So that would be your 3 days, or if it's 5 days or 7 days, however it works, that's when your earnest money is due.
So how do I submit earnest money? Do I submit it via check, Cash App, Zelle? Like how?
Cash App, absolutely not. Absolutely not. So it needs to be an official payment source. Your through your bank. You're going to do a wire. You are going to write a check. And I tell people, correct me if I'm wrong, Kevin. Like if they're writing a check, let it come from the account that the lender is aware of, right? Because on the back
Yep.
end, the lender wants to see where was this earnest money paid from. So don't take this $4,000 from under your mattress and say, well, I paid them in cash, because that's going to raise all type of red flags when you go to underwriting to say, oh, you paid this money in cash. So no, it needs to be a wire. It needs to come from, a check. And who are you paying it to? That's going to be written in the contract. Is it going to be paid to the closing attorney that's going to be handling it? Is it going to be paid to either your broker, whoever's holding it, their broker, who's ever holding it? It's going to be written in the contract when you're putting together the offer. So that's who and how it's paid.
Got you. So let me add my 2 cents.
Mm-hmm.
From the lender standpoint, all the routes that Tasha says are great to do, but let's say, for instance, it's a situation where you get it from a parent. Your parents pay it for you as a gift. Well, your parents pay it for you. We're going to look at that as gift funds from the lending standpoint, which means that we're going to have to source where those funds came from. We're going to have to get something called a gift letter, which we provide to you. We're going to have it filled out. It's going to have both names, how much it was, the donor, which is your parents' bank account number, and what bank it is, and then they're going to sign it. They're going to sign it, and you're going to sign the paper as well. They're also going to have to submit the wiring instructions, the wire that they sent to the attorney's office, or a copy of the canceled check, and they're going to have to provide their bank statement. We do that to source where it came from, so it didn't come from the mattress, right? We do that to make sure we're in compliance with what FHA requires or whichever type of funding source it is that it requires. Is it additional steps? Yes. Let me or whoever your lender is, let them know up front, or let your agent, Natasha, say, hey, the gift is coming from my mom. I mean, the money's coming from my mom, so we can get that paperwork up front. And because sometimes the bank statements get looked at, underwriters don't see it until maybe sometimes they don't see it until the second time, right? So we want to make sure we have a source for it. Not only that, the way that the deal is structured, because you got a gift, that could be the difference between you being able to qualify and not. I'm gonna tell you what I mean. If you're getting down payment assistance, the seller contribute the closing costs, and you get a gift. So let's say you don't have any money into the deal at all. Depending on your score and your assets, it could be a red flag, because they're saying, hey, yes, they have the money for down payment and closing costs, but they don't have anything of their own into this deal other than maybe $500 for an appraisal that we can count, and their file is marginal. Is this a risk for us because they don't have any money, but they're also maxing out what they can buy with their debt to income ratio? So how likely are we to get this property back? If you have those scenarios and you have funds left over that are liquid, then that's a different story. So, why I said that's key is because when we typically run a file, I run it as if the borrower is giving their own deposit. And if they are, and then we get down payment and closing costs, and we run desktop underwriting and we get an approval, we're Gucci, right? But adding that one additional layer could take away your approval. So we need to know all of these things up front. Um, just wanted to add that because it happens more often than not. And let me go even deeper. If if the down payment, let's say the wife is on the loan, the husband isn't, and he gives the $1,000, it's still considered a gift. because it's from someone who's not on the loan. So we have to get that same documentation. Or and also we have to get an access letter if you guys share the same bank account. So if the money came from you and it's you and your husband's name on it, he has to provide an access letter saying, "Hey, I allow for my wife to use this $1,000 from our account," just so they can document it to where the funds came from. So I wanted to add that so people knew. And if you're in the middle of it and it's happened to you, then that's why. Is because they've got to document everything. See, we got some more. Clark
Okay.
answered that. Go ahead.
Can I also add on to that? Like, yeah, and the sourcing of the funds, it sounds easy when it's like, okay, well, such and such is going to give me the money or give me a gift. But when you then tell them, oh, you have to provide your bank account or, the other steps, you have to make sure that that person is going to be willing to go through with that. So one of the main points that I have here is like, be upfront with your team, your lender, your agent, and let them know upfront. And we can figure out again, how do we navigate this to the closing table? The worst thing you could do is just not say anything. And then at the ninth hour, right before closing, it's like, oh, this came up, or yeah, I lost my job, but I really ain't want to tell you until they call. Like, no, like let us know so that we can like navigate things together. And then also you might be thinking, like, why do they ask for so much information? I know you get that a lot, Kevin. Like, why
I
do they
do.
need to know? Like, why did like I spoke to somebody recently and they want to relocate. And I'm like, okay, well, how long you been on your job? Like, what kind of job is it? Okay, when you move here, like, are you transferring? Are you finding a new job? And he was like, well, we'll find something. And I'm like, okay, I need you to talk to the lender, which I need to put them in contact with you because in his mind, he's just like, I'm a good person. I'm a stand-up person. I'm going to find a job. Lenders don't care about that. Like everything has to be documented. And correct me if I'm wrong, Kevin, like that came about when the market crashed in 07, 08, right? Things got tighter and stricter and what they're asking for. So I tell people in my buyer's consultation, like pack your patience. Whatever they ask for, they may ask for something multiple times. Just send it to them. Give it to them. You are asking these people to borrow $400,000, $500,000, $600,000. It's going to come with some questions, having to provide things multiple times. Just do that because once you close, generally, you never have to provide this information again. So just pack your patience.
Okay. Yeah, for a fact. Kimberly says, "What happens if the deal falls through? Does the buyer get it back? It sounds like a down payment."
Are you referring to the earnest money?
Yeah, referring to the earnest money.
Okay, what happens if the deal falls through? Why did it fall through? So your earnest money, so is it okay, you buyers have some protections within a contract. So you have your inspection period. So let's say your inspection period is 7 days. You did your inspection period, you got the inspection report back. We identified, okay, these are the five things these are the major five things that we are going to ask for. We're not asking for, oh, we don't like the paint color. That is cosmetic. We are looking for, listen, the AC was not working when the home inspector tested it. Not that the AC is old. And Kiana mentioned that before, like with the roof. Just because the roof is old doesn't mean it needs to be replaced. So just because something is old doesn't mean it needs to be replaced. But if it's not working, so seller, this was not working. We need it to either be replaced or fixed, and we're going to spell that out. But we did all that, and we could not come to an agreement. Or maybe sometimes the seller says, hey, I'll do 4 out of the 5 things you asked for, and that's fine. But let's say we could not come to agreement and you cancel within those 7 days. That was your inspection period. You can get back your earnest money. If you wait till day 8, 9, 10 to decide, yeah, I don't want to go through with it. No, you will not get back your earnest money because you are outside of your inspection period. Another protection is your appraisal period. You have a certain amount of days to operate within your appraisal period. So when I spoke about what an agent is doing, how I'm assisting you, one of the things that we're tracking are these deadlines. So when we are saying, okay, we need to go ahead and schedule inspection, if the inspection period is 7 days, we're not scheduling an inspection on day 6. Like, we need to get this done so we can get the report back, we can get it to the seller, we can get everything done within the timeline so that if anything happens, you can terminate. And then there's also a financing contingency. Like, you have a certain amount of days for this loan to be approved. If for some reason the lender comes to the back end, and Kevin can speak to that, like, why would we get all the way to the back end and now the loan can't be approved? You could terminate if you're within those time periods. But if you're outside of those time periods and you cancel, no, you do not get back your earnest money.
Right. So to answer the last part of your question, it sounds like a down payment. So whenever you put down an earnest money deposit, you get a credit for it. So if you put down $1,000 on a contract, we credit you that towards your down payment slash closing costs. If the seller's paying all your closing costs, it goes towards your down payment. So when I want you to remember, whenever a lender gives you figures, if I tell you that your closing cost is going to be $15,000, I can speak for Kevin. I've already given you credit for whatever the seller's giving you for down payment. I've already given you credit for if you use a down payment assistance. Any credits that you've gotten or anything that someone else is applying to your closing, the down payment assistance you put down or seller giving a credit, that's already been subtracted from that number. So I don't need you doing new math saying, hey, from that 15,000, the seller gave me 5, mama gave me 2, and I put down 3. I only got to bring X amount of dollars. I'm always going to give you that number with those things subtracted. So it keeps me in place and it keeps you in place. Um, if in fact, and this is rare, but there's some opportunity, like if you do USDA, and let's
So 12 months ago, I went to a business conference here in New York, and they're giving out these free sample packs.
say, there's no down payment, and let's say the seller was gracious enough to pay $6,000 and it cover your closing costs. If you have, if you had put down that $1,000, you could potentially get that back. The reason why I mention that is because sometimes you hear people talk about, hey, I got a check back at the closing. Typically, it's going to be USDA. Every once in a while, you might see something with like FHA or VA, but majority of the time, um, whatever you put down goes towards your down payment. And then if some down payment assistance programs, if like for instance, in Georgia, we have something called Georgia Dream. Let's say the down payment assistance covered all the down payment, the seller and whatever was left over from what you got for the down payment covered the closing costs, but you still had that $1,000 invested into it. It's a requirement that you invest 1,000 into it. So Georgia Dream just uses that $1,000 to lower the principal. So hopefully that helps explain everything. Sign for a 7% rate while houses get built or too much if at risk. Um, I think you're asking, should you put down, I think you're asking, should you apply an interest rates of 7% or is that too much risk on waiting? From the lender standpoint, if it's going to take them 4 to 6 months to build a house, I wouldn't lock in the rate because every day that the rates lock, it costs the builder. It's kind of like playing Russian roulette, though. If you wait, rates could go up or go down, but for the most part, there's different options. You got lock and shop, where you can lock and kind of wait and see, or you can float your rate. But not necessarily saying it's too much risk. But if you do lock it in the beginning period, most lenders are probably going to charge you some sort of premium for that time period because they lose money every day that it's locked.
Yeah, and I do a lot of new construction, and normally they're not locking. Like, they may quote you, like, when you get approved at the beginning, like, here's what current rates are. You sign the contract, but you can't lock your rate until like the house is kind of near completion, or X amount of time out.
Yep, that makes total sense. Let me see what
But
Brother
I would
Clark.
also just add here, as far as interest rates go, like, my recommendation would be stop trying to time the market. Like, buy when you can afford it and it makes sense. Like, the 3% interest rates, like, throw that out the window. Like, I don't think we're ever seeing that again. How about you, Kevin? Do you think we're ever seeing that again?
No, it would take a lot. It take
Yeah,
a lot to happen. A whole
yeah,
lot to happen.
I would say stop holding out on that. If that's what you're holding out on, like I would say just give that up. And just buy when you can, because it was just around election time. People are like, well, I'm gonna wait till after election time to buy. What exactly was supposed to happen after election? Like we're the day after elections, were interest rates supposed to just plummet? So yeah, so you waited, home prices went up. It's like just buy when you can,
Got
when it
you.
makes sense.
Clark said he heard from a lender. Is it true that if your deposit is less than $500 in your account, they will not ask you to provide where it came from, or is that just with refinancing? So that is true. There's a certain percentage of your income or the sale of the house that if it's less than, let's say, 1%, that you may not have to source it. But I always prep for the worst. Let's be able to source it. $500, probably not. Uh, but it just kind of all depends. So yeah, there are times where we don't necessarily have to source the deposit. But for purposes of meeting the minimum investment requirement, we may have to. What's that mean? There, with FHA, there's a minimum requirement from the borrower of at least 3.5% if they're not getting down payment assistance. So let's say they got some type of lender's credit, and we have to make sure we document that Susie has all of her money to meet that 3.5%. She may not have to bring the 3.5% to closing, but between her earnest money deposit, her down payment that she's bringing to closing, and the appraisal, that she's met that requirement. So, but yeah, certain things you don't have to source. I just like to prep so we understand, because typically it's not just $500 sitting under that mattress; it's a little bit more, and we don't want it to keep coming out. So, and if you um, and if you think about it, it just makes sense. Like all the crime we have going on now, funneling money into real estate. I mean, you got to have your checks and balances. But yeah, Clark, that's a good point too, my man. Um, Brienne says, "Thank you. Don't want to lock in just pre-approval. Yeah, nah, you don't want to lock in just in the pre-approval. You might be looking for 6 months. Just depending on you. What you're looking for, or looking to build. Um, so I want to kind of reset the room for a second. What the current market looks like. We discussed what the buyer's brokerage agreement looks like. And we're in this particular case, we're talking specifically to Georgia, how it has not affect her business because Georgia already had those checks and balances in place. Um, Later, we can get into with another agent that's coming on about how it's affecting his business, right? Because he's not in Georgia, he's in another state. So just kind of, I want to get perspectives from different places. Um, so Tasha,
Mhm.
if if you were to give some advice to some buyers that's looking, this is January 1st. If you're looking for someone who wants to purchase this year, um, and they're not sure what to look for in an agent, just give us like your top three things that they should ask. Like, top producers don't mean they're a good agent either. I've witnessed that.
Okay.
Like,
All right. So there's actually, if you go to my YouTube channel, I want to say my intro video is 5 ways to pick a realtor, 5 things to, yeah, something along those lines. So just check that video out. But just off the top of my head, um, one, you want to see if this agent is kind of specializes in what you're looking for. You do have some agents that work anywhere, doing everything, that's fine. But let's just say you want to buy a multifamily property. I would recommend that you go with an agent that is either working or specializes in investment properties or multi units. Now you could find an agent that's saying, "Hey, I'm willing to go with you along this ride to figure it out," but you want to make sure that, kind of what you're looking for is what their expertise is, or, they're willing to go on that ride with you. That's one. Another thing in an agent, that they're willing to, guide you through the process. And I think this is where the changes in the buyer brokerage agreement, like agents now, even though it's been in place in Georgia, a lot of agents did not kind of lead with value, like really showing like, okay, this is what the process is going to look like. This is how I'm going to assist you. Like, so you find one that is going to be a guide to you through the process, not just a show up, open this door, and fill out the contract based on what I tell you, like based on you running the show. And on the other side, if you are somebody that is buying and you just want to run the show, so you just want somebody to fill out paperwork, be upfront with that too. Like if somebody came to me and that's all they wanted me to do is just fill out this paperwork, that wouldn't be a good fit for me, because I'm more of a guide along this journey. So if you want somebody that, hey, I just want you to fill out this paperwork, you just want somebody to do ministerial duties, be upfront about that, what you're looking for. Third one is escaping me right now, but go ahead and watch that video on my channel.
From the lender standpoint,
Mhm.
in terms of working with your agent, I think you want somebody that's knowledgeable. Um, they don't have to be a superstar. They just need to be willing to accept feedback. So, from a lender standpoint, I encounter agents who don't want me to tell them anything.
Mm.
And because they have never seen it done that way. My goal is to help you as my partner to make sure we all achieve the goal for the buyer and the seller. Um, Example, the there was a deal that I was working on. The listing agent, actually, the listing agent, there was a repair that needed to be done. We was FHA and we wanted to do an escrow holdback. And, the buyer's agent had never did one before. She's like, Kevin, can we do a three-way call with the listing agent to kind of explain to her so we're all on the same page? Cool. Whatever it takes for the team.
Mhm.
I call her. I've never heard of that. I've been doing this for 30 years. Of course. Never heard of it. That's fine. This is something that we offer. We can do up to $10,000. What we'll need to do is get estimates for the repairs, let the buyer decide or the seller decide who they want to do the repairs, and then we get an invoice. We submit it to underwriting, and then they approve it. We close on the deal. The buyer, they have um typically like 14 days to get the work done, so it's not drug out, right? Because it's not going to be a major repair at that point. And we want to make sure they understand they get paid once it's been inspected and the work is done. It's done that way to protect us and the buyer and protect this whoever pays money. Explained it to her. I've never heard of such thing. No problem. Talk to your seller about it. If you want me to jump on a three-way call and explain it to your seller so they understand, that's fine too. But at the end of the day, either closing's going to be delayed until it's done, or we can escrow the funds with the attorney's office, and then we can close. And then the only way that money leaves escrow is once it's an approved repair. Cool. Call the agent. And she calls me back. Well, my lender's never heard of it. Doesn't mean it doesn't exist. It's something that my company does. And we finally got it done, but it was like it took time. So let's say, if I'm not mistaken, it probably took 4 days. That's 4 days we lost. So closing pushed back anyway because you didn't
Mhm.
agree. And when I say like, I I know of a lot of programs because I try to find ways to get deals closed for people. So I like the problem solving aspect of it, right?
Not all lenders
Um,
do, by the way.
right. Yep. I like the problem solving aspect of it. And I tell people all the time, I'll do a jumbo loan and I've worked on it, but I haven't done a ton of them. The ones I've closed. But if someone said, is that your strong point? I'm going to be honest and say no, but I can get it done. If you ask me FHA, VA, USDA, conventional, bank statement loan, DSCR loan, yeah, we're going to get it done and we're going to figure it out. And that's just being realistic. Some lenders don't know about programs because they don't have that kind of business. Like, I did a deal with an agent. She said she'd been doing it 10 years. She said that was her first FHA deal. And
Wow.
I asked her, she was willing to do it, but I asked the buyer's agent, I was like, how is that her first FHA deal? Well, she comes from a well-to-do family where her clients have money, so it's conventional or cash. But she did the FHA loan,
Mm.
and you know what she told me, Natasha? She said it's not as bad people say it is.
And why would, yeah, yeah. And
She was
Clark
like,
said,
"How?" And she had been there for 10 years. She was like, Kevin, I've heard horror stories about FHA lending. That's why I never tried to even do one. I said, it's just
wow,
like any loan. Like, and I explained it. You can have during the pandemic when nobody wanted to accept FHA, I did a call with an agent and she was like, it's FHA. My client kind of, they want conventional. I said, listen, this young lady's 25 years old, recently out of college. She doesn't have the credit profile that that conventional financing will accept. However, whether she goes conventional or FHA, she's got her own down payment. She's got her own closing costs and she has her own score. The only reason why somebody doesn't want to go through FHA is because they're afraid of the appraisal, and it's not that bad.
it
If
really
there's
isn't.
things that need to be fixed, you should have fixed them anyway.
Mm-hmm.
And if it's things that need to be fixed, sometimes it's not a major repair. That's the only thing. We went through that transaction, there was no repairs, and she said the same thing. She's like, it wasn't as bad as like we thought. And we closed ahead on that particular deal, we closed early because the buyer was ready to go. So like when I say they need to be coachable, sometimes even though the seller says they want conventional, and if it can fit in that guideline, they just have to fight and say, hey, talk to my lender. This is what we've done, and go from there. And that's what I mean by being coachable. The agent doesn't know it all on the financing side because they don't do financing. Just like when people, under contract say, "Hey, what do you think of this house?" They've never seen it. Put it in the Google picture. So, like, I'm sure you get questions about lending, and you're like, "Well, that's not my job." You know what I mean?
Like, there's no way I could know everything that I'm supposed to know and keep up with it because we both have to do continuing education to keep up on it. So there's no way I could do what I do plus do what you do. That's why it's so important that we function as a team and we actually listen to what the lender says, because at the end of the day, it's going to come down to the underwriter. Like,
Yep.
are they approving this file? I do not want to do all this work on this side to get you, and now your hopes and dreams are set on closing, and then we get to underwriting and they're like, no. So that's why we really want to function as a team. And then Clark said, you do bump into people who don't want to listen or even or try something. It can be a nuisance, and that's seller side, the other agent side. Yeah, there's a lot of managing that goes, of emotions, expectations, all of that. So if you say I'm not going to use an agent, you're taking this on. Good luck. Like,
And your job?
and your primary job, running your household, your family, all that, and you're going to figure this out. It's a lot. So,
Gosh,
and then if you're relying on the seller's agent to now take care of you, they cannot do both at the same time. So,
nope, nope.
yeah.
Or you may have to cash app them.
Kevin, I know we're about
Dude,
to wrap up, right?
yeah, we're gonna wrap up. We're gonna wrap up.
Okay, I just
Um,
I just want to say, like, the big picture for me here that I want anybody to take away is, like, I do not see home ownership getting easier. this year, like if home ownership is a goal, whether it's your primary residence, buying another property, like I need you to get into this market and stop putting it off. Like the more I drive and the more I see these full communities available for rent, it scares me. Like I'm like, what this is very strategic. It's not getting easier. The interest rates, the home prices, now buyers gotta, may have to take care of some costs. It's not getting easier. So the longer you put off, it's making your chances to get in this game harder. So I would just say, really put a game, get a team, put a game plan in place and actually work that plan. If you need to do some things, you need to work in your credit, we need to put a plan in place and really see where you are, where you stand, and what needs to be done. And I'll be
Cool.
grabbing your journal, Kevin.
Yeah, cool. I
Let's check
appreciate
that
it,
out. Yeah,
Tasha.
I'm gonna check that out so I can give it to my clients. And then also just a nugget you mentioned earlier about kind of not waiting throughout the year, waiting to the end. I'm going to recommend this book, The 12-Week Year. And we're going to continue to reassess our goals throughout the year. So this book kind of talks about breaking your goals down every 12 weeks and reevaluating and adjusting. Like we're going to keep this goal. If your goal is home ownership, if it's budgeting, whatever it is, we're going to like keep it top of mind 2025 and get it done.
Cool, cool. Appreciate it, Natasha. Natasha's contact information will be below. We will have a link to the
Mhm.
video she spoke about on her channel, as well as her channel. She's got a dope channel, great information.
Thank you.
I don't know if you got your comedy hour on there as well that you do on your reels,
That's a sprinkled in. I can't leave my day job.
but hey, if you guys are looking for an agent throughout the United States, Tasha has great referrals. Give her a shout and support her YouTube page. Thanks, Tasha.
Oh, my pleasure. Happy New Year, guys. Thank you for having me.
Likewise,
All
likewise.
right.